All right, so we're going to be talking about some narratives in crypto. I'll start with having everyone on the panel just introduce yourself a little bit and maybe talk about for your respective firm, what's the main North Star narrative that's guiding your strategy?
Yeah, good morning, everyone. My name is Gerard Barile. I'm the venture lead at Wave Digital Assets. We're an SEC registered investment advisory firm specializing in digital asset management. For us, we lead a generalist venture strategy. But to give you an idea of some of our investments over the past year, we invested in a stablecoin for an interested yield bearing component, prediction market, a DePin project, and a handful of other ones.
I'm Charles Adkins, the CEO of the HBAR Foundation. We are the main driver of the HBAR economy, which is the Hedera network. And we really want people to build their businesses on the Hedera network and utilize HBAR as a commodity to drive that business.
Hey everyone, my name is Rena. I'm CEO of Trust Machines. We build Bitcoin-based products predominantly on Specs L2. We also have a small SPV where we're investing across all Bitcoin DeFi. And our North Star is actually to be more and more Bitcoin getting out of cold storage onto the on-chain and deployers and DeFi so they can be a productive asset.
Max Williams. I'm a partner at Granite Digital Assets. We're a digital asset investment firm. Our North Star is digital assets, blockchain technology is like the strongest form of network effects. Several projects built on top of them, through the powers of open source and incentives can lead to growth powerful than more Web2 technologies.
All right, thanks. So, what's one overarching narrative that you think is underlooked and maybe underrated as well?
Yeah. Right. Hey, one of the major narratives I think that are very underlooked. I'll talk about two, one briefly, but I do think that Uniswap fee for hooks is something that's underlooked at this point in time. Adding a smart contract layer on top of liquidity pools, I think adds for a high level of functionality. At this point, it's still very experimental and I think less than a month old at this point. So there's quite a few unknown unknowns. Another narrative that I think is going to take shape this year and we're seeing a high level experimentation with is this concept of futarchy. So when you think about prediction markets, you're able to place bets on an event that is going to occur, a specific sport event, who's going to win it, who's going to win the presidents, etc. With futarchy, you're actually betting on the event. So this is a new form of DAO governance where at the executive level, you can make high decisions via markets. So think you want to hire a new CEO. You want to turn on a fee switch. You effectively create a futarchy market around that where people can bet on the yes market and no market. And at the end of a given period of time, that specific market matures and that decision is made. So if you believe in the efficient market hypothesis, I think this is going to be a really interesting way for DAOs to score a governance issue. The mic up. Is that better? Thank you.
Yeah, I think for us, we kind of sit in a unique space as, a layer one, and HBAR in particular, it's really good for driving the underpinning technology of, ubiquitous computing. So when you think about the future of AI agents, how do you, allow a verified AI agent onto your personal network? How do those agents pay each other? So we look at things and, I use the coffee bean analogy a lot. It's like coffee beans as a commodity are great, but what makes them a superpower is when somebody like, a Starbucks takes them or a Dunkin' takes them and they're actually driving their business using that commodity. And so, for HBAR in general, one of the things we look at is the proliferation of AI, of all these other technologies that need to have safety rails underneath them, payment systems underneath them, IoT devices that you need to permission onto your own network, and maybe in the future even have them pay each other. HBAR and a really fast fixed cost layer one is something that, we're really driving into the future.
For me, there's the two narratives that I'm running towards and very passionate about. One is using Bitcoin as collateral. I know it's a really common theme and it's a simple theme, but not enough Bitcoins actually use this collateral for lending markets for things like that because quite frankly, everybody got wrecked a couple of years ago and did not trust bringing Bitcoin back. And The rails have changed drastically from where we were as an industry 3 years ago, 22, to where we are now and bringing Bitcoin back on chain and such. There's a lot of interest in innovations for Bitcoin restaking, Bitcoin lending and such. And I think there is a world out there that I don't necessarily want to see Bitcoin in ETF SD. I don't want us to be more Bitcoin at BlackRock. Like, I think like as an industry, we will regress going in that direction. Like, I'll stand by that statement and free Bitcoin back the people and make it feel like it is your means of collateral, it is your means of your safe haven or whatever it may be. Is pretty like a strong narrative to go for. The second one I am feeling kind of the pressure for is kind of to what you were talking about on AI agents. Just thinking about the energy trade and decentralized issue and how we're going to power these days. My background's actually in oil. I'm a drilling engineer and I worked offshore for many years producing oil. And so thinking about how we can do the corridor energy green that factor and support it still through our efforts to maintain proof of work for Bitcoin mining and kind of going in that direction and not being a work for it.
Yeah, I think for us, I think one narrative that's maybe becoming a little bit less overlooked right now is something closer to, value investing, not, the big hype growth focused stuff like AI. Thinking about what are the products people continue to use all throughout the crypto market cycles, things like Uniswap. But, I agree with Gerard on, V4 is super interesting. Hooks, that's a product that's successful on almost every, blockchain it rolls out on. Base, Ethereum looks like it's going to launch on Monet day one. But also what other projects, that are generating real revenues and even passing back those revenues to the, token holders. So kind of that more slow and steady growth rather than the kind of boom bust of AI's hash and then it's not. That's something that may persist through market cycles, and especially with some of the things happening regulatory wise. So I think stablecoins kind of fit into that as well. As a little bit less exciting, but I think something that could, really become more mainstream faster than some of these other things.
Great. So my next question is a little bit of the opposite perspective. How do you personally differentiate between what's genuine innovation or short-term hype? And are there any existing narratives that you think are just short-term hype?
I mean, I can kind of jump into that one. I think, short-term hype around just the number of new blockchains and crypto projects coming out. There's a million of those things, and it just reminds me of the early days of the internet and the browser wars that were out. Everybody had a browser. Everybody, was trying to launch an email client. It's like eventually these things kind of converge into your main places where you coordinate and you do your work. And I think we're going to see some of that in the industry, but more think of it as like cities, and cities are kind of uniquely known for certain things. So you will have blockchains and crypto that's specifically great for financial services. You may have some that are really great for supply chain or low energy usage. I think that's one of the narratives is like the best thing to do is to launch yet another chain. That's something that I still see people in the market wanting to do. It's a really hard thing to do to get a foothold into that market. So yeah, I think a lot of the meme coin stuff, that's, this crazy hype. Our unique perspective at Hedera, obviously with the governing council, is that we have these enterprises that talk with us all the time, and a lot of the real technical stuff and crypto focused stuff, they don't care about at all. They literally come to us and they say, how can we use the technology to generate? They don't even care about cost savings as much as it is, what features can we implement into our business to create net new revenue? Net new revenue is something you will hear over and over and over again. And they're not technical people. They're not going to care about the latest feature set on whatever chain it is. Show them how to make revenue, and that's how you really win the market share.
Yeah, I would agree with that. I think especially on the infrastructure side, like the number of new chains that launching on the premise of like fast and cheap, I think like that's already been done. So you have to do something a little bit different, different approaches. Like if you look at Base, like yes, it was fast and cheap, but I think kind of the distribution model in partnership, obviously in partnership with Coinbase. You look at Telegram with Ton, like that was kind of a different approach to that. Whether it was successful or not, we'll find out. With Hyperliquid, a really good application to kind of, get people there on day one rather than this general purpose where fast and cheap people can build things on us. I think you have to have something different there. So you're seeing, Monet, Airchain, Mega ETH. I think a lot of these coming to market. That it's kind of the, all L1 from 2021 all over again. So I think, a little skeptical of that.
I do feel like we're over the era of Adkins and like we have to like get out of that kind of cycle and mindset. I know there's like efficiencies that could come with having your own app chain, but at the end of the day, you're making it really difficult for retail to interact because they have to have X number of wallets, X number of things, if we're not making it netly better for crypto.
Yeah, I agree with a lot of what the folks up here said. Look, one thing that's true in this space is within the crypto industry, the attention mindset with folks is so short-lived. If you've ever watched a children's soccer game, one kid kicks a ball, all the kids run to it, someone else kicks the ball, everyone runs to that. And I think that happens a lot in this space. So from the venture side, when evaluating different things, oftentimes we're trying to look, is this a solution looking for a problem? If so, likely not going to look to invest within those sectors. As for overhyped areas, I won't comment on any specific projects, but I do think that some of the subsectors within the AI meets crypto area, we've clearly seen the market take its opinion on some of those at this point. With that, I do think there's going to be a lot of true innovation that comes through there, but you're going to have some of the highs and some of the lows. Thank you.
Yeah. Okay, cool. I guess the next question, and I kind of want to double tap on something you guys talked about a little bit. Like Rena talked about, I've actually never heard this perspective that the BlackRock ETFs, like kind of accumulating a lot of Bitcoin could be a negative as well as a positive. And my next question was, how do evolving regulatory changes shape crypto narratives for you and your firms? I know HBAR is going to have an ETF soon. It's not like some other firm filed it. But I'm curious how I've never heard, it's a very interesting perspective that as regulatory changes become more friendly and ETFs become more dominant, we kind of lose a little bit of the spirit of crypto. So you guys can talk about regulatory changes more broadly, but I would like to go back. That was a very interesting kind of like thesis on ETFs. So I'd love to hear more about that.
Yeah, like for me, it's like you want to increase Bitcoin adoption. Like that's for us, like the fundamental thing of like why most of us got into crypto in the first place. Like Bitcoin was your entry point. And if we're going to make it continue to be more accessible, I could see value in an ETF, but it loses the spirit of why we wanted decentralized money to start. And it doesn't necessarily increase the kind of global adoption of global financial inclusion, kind of the entire basis of why blockchains exist. We're trying to create access, and ETFs kind of take it away from the spirit of the allure of like what we were going for. And I like fundamentally think that by putting BlackRock and such out there on doing Bitcoin ETFs, you have 80 billion inflows, outflows on a give and take. So all of that Bitcoin is going to stay in BlackRock custody. It's never going to come back on chain. So like things that I'm thinking about is, can I build something restaking to use that Bitcoin, let it still be in custody, but still have it secure the Bitcoin security budget and kind of keep that going. And I haven't seen anyone really going in that direction because everyone is very much a ETFs, mass market, let retail flow, but you're not letting retail flow in the ways for on-chain of how we actually wanted this to be done.
I mean, from that, I absolutely agree with that 100%. And I like that, the way that she phrases it as digital money, because this is where the differentiation is between chains and types of cryptocurrency. Bitcoin to me, it is digital money, and digital money as an ETF that, a large institution owns and then also wants other people to invest in that money, to me doesn't make a ton of sense. You want to keep that as liquid as possible in individuals' hands as much as possible. On the flip side, something like, HBAR, and I can just speak for us, is an ETF may make a little bit more sense because we don't go to market and say that we're digital money. It's more utilized as a backbone to transact and do tokenized transactions. But yeah, I think that's where the big differentiator is you can't really weigh all of these layer ones or these different kind of cryptocurrencies as equivalents. Bitcoin is very different. from a lot of other things that are out there. And there's a lot of unique properties to that where some of the more traditional models just don't make sense. So it's interesting that we can, we would love to have our ETF approved and have that out in the marketplace. At the same time, I can say ETFs likely don't work for every currency.
Yeah, I'll touch on this one from the venture side of the house. It's really clear that the U.S. has become a pro-innovation crypto hub. And over the past few years, we've seen builders move offshore, whether it be to Lisbon or Dubai. We're starting to see a number of builders start to either reshore in the United States or start their company actually in the United States. So this is the year I believe that New York City will become the de facto crypto builder hub of the world.
Do you have any? It's okay if you don't have any thoughts on regulatory changes.
Yeah, I mean, I think they're going to affect, like I kind of touched on earlier with, protocols generating revenue, Uniswap kind of being a good use case of the fee switch and what happens there. I think we kind of saw an initial couple of protocols, put those up for vote. And I think those protocols have done well over the last year. The ones that do have the economics, something like Radium, despite recent price action. I think that buyback is extremely powerful for the token, and I think it can help support. We're talking about narratives here. I think that helps something push through narratives of having economics to support what's going on with the project. So I think if you can get, I think protocols will be more willing to experiment with things like buybacks and things like turning on fee switches, even if it's not a buyback or kind of like a staking distribution. I almost think, we talk about it internally. It's almost like when you start a fire in a chimney, at first you need to light a little bit of wood and get the smoke going up the chimney to guide the fire out. I think that's what these projects need to do to basically prove we can accrue revenue. And that will, at some point, we're not saying we want all the projects we invest in to be passing back dividends to their shareholders and executing buybacks. Most of these projects are early stage growth projects, but I think the market needs to be proven that we can generate revenue, accrue value and share that with token holders. So I think we're excited to see how that might take shape.
I think maybe one thing to add is this week Uniswap filing got their no action end of investigation. So it's going to be the era of bring back DeFi to America, no longer geo-block in America, let American users stop buchaning and come back of actually bringing liquid capital that we've all had resting with us but never quite could deploy. It's no secret that Stacks is all in on DeFi. We have our DeFi protocol called Granite, but it's just the idea of you should be able to use all of your assets at your disposal and kind of do what you wish, and going back to that dream of my money, my choice of how I use it. And kind of the new administration is really opening up that window for the U.S.
Yeah, that's a great point. Yeah, we've seen a lot of news just in the past week from Coinbase, Uniswap. It seems like Ripple will be any day now, but we haven't seen they had Binance US had a stay in their case, so they're not something going to come out there soon. But
I can probably comment on that. I'm ex Binance US, and Binance US went through extraordinary regulatory efforts to comply with the previous administration, and to the point that Operation Chokework actually cut off Binance US's out of financial access to American money system. And now the new administration is working through it with the team and such to bring back, because they realized how far they actually just failed every American.
Yeah, for sure. So I guess one of our last questions is, if we were to look back a year from now, which current narratives do you think will have matured positively, and which ones will have faded into irrelevance?
I'll kind of touch on, earlier there is kind of it's just the real delineation of which AI hype is real and which AI projects are actually, going to survive really. And I think that's where I think a lot of the startup AI that wants to bundle crypto with it, it's really going to struggle. I think a lot of the larger organizations and people that are building real things in the system that they need some kind of blockchain or cryptocurrency to manage agents inside of something like, a ServiceNow or a Wipro or some large organization. They're going to implement these things a lot faster than a startup or a challenger that's trying to come on. I would say, a year from now, things we're not going to see. We're not going to see meme coins. I'm sorry for everyone that loves to play the speculation game. That's online gambling. There's plenty of places to do that, and we don't really need that in crypto. Outside of that, you're probably going to see more traditional financial products. We'll look back on an era like this and say, look, 2025 was supposed to be our big year. I would say these first 6 months, you're going to see a lot of volatility just from macro pressure, that people are unsure about tariffs and how that's going to work out. Before we got on this panel, I said, yesterday I had to go up and give a talk and the market was just trash. And somebody said, like, dude, you sure you want to go on stage when the market's like this? And I'm like, what's the difference? This is not a crypto problem. Like, I wouldn't want to manage a Fidelity ETF on a day like yesterday and go on stage. Like, this is not a crypto problem. There's some jitters in the market that'll probably shake out over the next 6 months. And I think, the back half of the year, we should have a great time. And hopefully it's a long cycle, but I think a year from now, we'll all be better for the stuff that we're doing, here, like these events and the type of camaraderie we have from the community like this. So hopefully some of the more speculative narratives will shake out and some of the more use cases will come to the forefront.
Yeah, I can touch on a few different topics here. Stuff that I think will mature over this year are areas that have had high levels of investment. Two of the ones that we've looked closely at are the DePin sector and then also the RWA sector. On the DePin side of the house, it's a truly crypto innovative vertical that we're seeing. The ability to bootstrap an entire suite of nodes or compute whatever is needed and then rewarding that inherently with tokens. I think we're going to see revolutionary business models and already have. If you've attended any conferences over the past year or so, those have been 2 out of 5 of the main narratives sprouting that in those areas. On the RWA side of the house, I do think that a lot of people are focusing on tokenizing bonds, tokenizing stocks, things like that. But I do think that the existing infrastructure in place suits that really well. Like, I can go use an app, send money, buy stocks, buy ETFs and whatnot. But I truly think that some of the innovation is going to be on the niche illiquid assets, things like pre-IPO shares, large assets with low liquidity, think commercial real estate, private equity. And it could, someone told me this idea yesterday of race horses that are being tokenized, where the profits and then the breeding of them then comes on chain. So I do think that we're going to see some innovation on the niche RWA side of the house that don't have the existing market infrastructure in place. On the narratives that go, I do agree partially on the meme coin side of the house, especially when it comes to a lot of the fabricated memes that we've seen, celebrity memes, some of the real froth and grift that has happened in this sector over the past 2 or 3 weeks. And the tide's out on that, and that's become pretty clear. The second area that I think, at least I hope that we see some level of innovation on, is airdrops. Right now, effectively, most people see that as free money. I farmed something, I participated in something, they then receive an airdrop, and a lot of folks just go and sell it. And then you'll see a ton of sell shaming going on Twitter and other places. I'm hoping that we're able to see the existing airdrop mechanics see some level of innovation where there's a sticky component to it or something else there where people aren't just taking a token, immediately dumping it, and then a project that could have had a really lengthful life, their token is down bad initially.
Definitely agree on structured financial products will kind of be the theme of going to this cycle and such, mostly kind of via DeFi, but maybe 2 different takes of what I think will be kind of heavily invested in kind of going forward. One, going back to like blockchains as provenance, we're in this era where you can't tell what is a bot. You don't know what is AI, what is real and fake. And so going back to, can you use on-chain to actually verify this is real? Can you use on-chain to verify this is my identity and such? I think it's like highly overlooked from previous cycles, and there's been innovations in the past, but they didn't quite get mass market appeal. I think this is actually the time, given kind of what goes on X and such, that you want to kind of have that identity verifier and like crypto is like the best way to do it. Secondly, I would say for me, what's like kind of interesting is going back to abstracting everything from the user. So I don't think we're going to be in this era of so much complications or so many different farming or things like that. But I stand by this. Pudgy Penguins did more to onboard retail and people into crypto unknowingly. And so kind of having that consumer focus and having the abstraction of, it might be crypto, you might know it might be cool, but you may not. You find out about it kind of from the other side, and then kind of like fall back in love into crypto.
Yeah, I think on the ones that have faded, I mean, it's a pretty consensus take, so maybe worth looking at the other side of this. But meme coins, I think, may have just been, taken too far. I think it was an allergic reaction to, the kind of VC unlocks were getting dumped on. And I think we may now see that swing all the way to the other side of the boat. So I think, as of late, we've seen, make fundamentals great again. And some, like I said earlier, fundamental value-based investing may I think mature, especially as the taste of new investors coming into this asset class may be more TradFi-oriented people. They have a little bit of a different take on meme coins than probably most of us in this room. Then I think AI is real. I think, despite it being definitely a narrative right now, it have probably more narrative value than substance value, especially in crypto. But I think AI is probably, one of the most important, aspects of this generation right now. I think usually when those new technologies, come into place or new revolutions happen, the other innovations around them work together. So I think crypto working with AI is definitely interesting. So definitely watching that space, as well as I think stablecoins being super important. You had Stripe firing Bridge. The Carlson brothers were recently on All In talking about how much they're bought into stablecoins. This morning, the CEO of Bank of America said they're going to issue their own stablecoin. So I think every bank will have a stablecoin. That's probably how most people will interact with blockchains without even knowing it, is using stablecoins.
Wow. Well, everyone, that's about time. Thanks so much for letting us speak, and give a round of applause for our great panelists.